My name is Aubrey Hurbey, and I am a senior fellow at the Africa Center at the Atlantic Council and the co-founder of Tofino Capital. It's my pleasure to be hosting this conversation this morning on an essential topic, which is entrepreneurship. The future is now. How can we harness entrepreneurship to capture the demographic dividend? 1 million Africans turn 18 every month. The job creation challenge on the continent is one we haven't seen in history on this planet, the number of jobs that need to be created. By the end of this decade, there will be more young Africans entering the workforce than the rest of the world combined. And so we're having a conversation today with some of Africa's leading entrepreneurs and investors on how we can make job creation a reality. To kick us off, I'd like to invite to the stage Mr. Alhassana Kaba, the founder and CEO of Mansa Bank, to speak a little bit about what Mansa Bank is doing in the space and entrepreneurship writ large. Welcome.
Bonjour à tous, honorables invités en vos rangs et grades respectifs. Merci de m'avoir convié à ce panel pour parler de l'entrepreneuriat et comment exploiter le potentiel démographique. Avant de parler de Mansa Bank, j'aimerais d'abord attirer l'attention de l'audience sur un point qui est important. Tout le monde l'a rappelé à plusieurs occasions. Le potentiel africain est énorme parce que nous avons la population de jeunes la plus importante au monde. Et les années à venir, nous aurons de plus en plus de jeunes sur le marché de l'emploi. Et ces jeunes qui viendront sur le marché de l'emploi, on parle de 375 millions d'ici 2030 de jeunes Africains qui seront sur le marché de l'emploi. Malheureusement, il n'y a pas assez d'emplois. Et tous les jours, vous et moi ici assistons à la perte de repères de cette jeunesse-là, qui ne sait plus quoi faire. Quand on prend les chiffres, je lisais hier les chiffres du projet Migrants disparus, qui nous dit que de 2014 à 2022, 12 053 jeunes Africains sont morts dans le processus de migration, sont décédés. Imaginez-vous, 12 053 jeunes sont décédés, dont 700 enfants. Parce que ces jeunes quittent un continent plein d'opportunités, parce que ces jeunes n'ont pas d'espoir. Et quand je vous dis 12 053 personnes, il s'agit de vies humaines, de familles, de communautés. Donc, soyons choqués, cela doit nous choquer, nous tous ici, pour comprendre que la création d'emplois n'est pas de la responsabilité uniquement des dirigeants ou de l'extérieur, mais de nous tous ici présents. Nous devons faire en sorte pour créer des emplois, pour que cette jeunesse puisse espérer. Mais comment créer des emplois? Comment nous assurer que cette jeunesse puisse rester en Afrique et contribuer à son développement? Il y a un proverbe africain qui dit « Dis-moi quelle jeunesse tu as aujourd'hui et je te dirai le peuple que tu auras demain ». Quelle jeunesse avons-nous aujourd'hui? Une jeunesse qui est désemparée, une jeunesse qui ne sait quoi faire, une jeunesse qui est laissée à son propre compte. Et c'est pourquoi le panel dont ce groupe va discuter est l'un des panels les plus importants. Malheureusement, il n'y a pas assez de jeunes dans la salle, ce qui aura donné encore plus de sens au poids de nos mots. Parce que nous devons être concrets et pragmatiques. Comment créer des emplois pour la sauvegarde de notre jeunesse? Le peuple africain de demain sera la jeunesse d'aujourd'hui. Cette jeunesse-là, si elle disparaît, il n'y aura pas de peuple africain. Pour qu'il y ait ce peuple, il faut qu'il y ait des emplois. Nous devons créer des emplois. Et pour créer ces emplois, le thème qui a été aujourd'hui abordé, qui sera abordé, c'est un thème qui porte sur la création d'emplois par l'entrepreneuriat. L'entrepreneuriat, c'est beaucoup de choses, mais en même temps, qu'est-ce que c'est? C'est le courage d'entreprendre, c'est le courage d'oser. C'est le courage de faire ce qu'on a envie de faire ce qu'on sait faire, pas pour devenir riche, non, mais pour créer de la valeur pour ce continent qui en a besoin. Entreprendre, c'est accepter d'apporter sa contribution pour l'essor d'un continent qui a tant de potentiel, mais qui malheureusement est laissé pour compte. Et c'est partant de ce principe-là que moi-même, banquier, j'ai toujours voulu faire la banque. Et à un moment donné de ma carrière, je décide, écoute, à un moment donné, c'est bon d'être employé, c'est bon d'être directeur général, mais le capitalisme a des règles. Ces règles-là reposent sur le capital. Qui détient le capital? Qui contrôle le capital? Celui qui a le capital, c'est lui qui fixe ses objectifs et c'est lui qui fait en sorte que le futur soit porteur de valeur ajoutée. Et c'est ainsi que nous avons décidé de créer une banque qui est Mansa Bank, créée par des jeunes Africains de la zone. Et dans la création de cette banque, l'idée était surtout de nous assurer que nous serons capables d'offrir un lendemain meilleur à nos jeunes. Pour ce lendemain meilleur, nous avons trois, je dirais, options. La formation, le financement et l'accompagnement des jeunes. Pour ce qui est de la formation, il est de plus en plus important pour nous tous ici que nous puissions faire en sorte que la formation reçue par nos jeunes correspond aux besoins du marché de l'emploi, du travail. Nous avons beaucoup de diplômés, mais est-ce que ce sont ces diplômes qui nourrissent cette jeunesse? Non. Il faut qu'on s'assure que la formation soit adaptée aux besoins du marché de l'emploi. Le financement, il faudrait aussi que nous puissions nous assurer qu'une fois la formation acquise, les jeunes qui viendront sur le marché de l'emploi puissent être accompagnés. Malheureusement, qu'est-ce que nous voyons aujourd'hui? Nous voyons aujourd'hui que beaucoup de grands groupes financiers qui étaient en Afrique sont en train de se retirer de l'Afrique. Mais en même temps, cela est une opportunité. Parce que ici en Côte d'Ivoire, nous avons un adage qui dit « Quand quelqu'un laisse, quelqu'un prend. When someone leaves some things, someone else will take it. » Donc, quand quelqu'un prend, quelqu'un laisse. Quand quelqu'un part, quelqu'un vient. C'est une opportunité pour nous autres Africains de nous assurer que nous connaissons exactement les spécificités de nos marchés, que nous puissions saisir cette opportunité pour prendre ce secteur financier et voir comment accompagner ces jeunes gens. C'est un peu dans ce cadre qu'au niveau de Mansa Bank, nous avons lancé depuis 2021 un programme que nous avons appelé Jeunes Mansa. Ce programme Jeunes Mansa vise à accompagner les jeunes entrepreneurs, à leur donner un financement à un taux de 4%, qui, pour une banque nouvelle, qui a ses propres difficultés, est un taux pour les encourager à aller dans l'entrepreneuriat. Avec ce programme de Jeunes Mansa, nous avons mis en place, nous avons vu d'abord des projets promoteurs de ces jeunes Africains, des projets porteurs, que nous finançons à hauteur de 100 à 200 000 $ par projet. Parce que nous pensons que cette jeunesse a besoin d'être accompagnée. Nous autres Africains, nous n'avons pas le choix. C'est une question de survie. Nous devons créer des emplois, sinon ce serait la catastrophe pour demain. Alors, le mot que j'aurais à dire à ce panel, c'est d'avoir des solutions pratiques, pragmatiques, des solutions qui pourraient être implémentées dès demain. Aujourd'hui, nous avons des secteurs porteurs. Le secteur financier, 80% de la population de nos zones est non bancarisée. C'est-à-dire que tous ces jeunes qui ne travaillent pas, par contre, se débrouillent dans l'informel. Mais ce secteur informel, comment le rendre formel? Est-ce qu'il est concevable qu'avec la qualité de nos, je dirais, de nos intellectuels, de nos entrepreneurs que nous avons aujourd'hui, nous ne soyons pas encore capables de transformer ce secteur informel en secteur formel? Que nous ne soyons pas capables de faire en sorte que ces jeunes gens qui se débrouillent puissent, par cette débrouillardise-là, avoir des accompagnements. Donc, c'est un peu cet objectif que nous essayons de suivre au niveau de Mansa Bank et que je pense que ce panel, Audrey, va prendre à bras le corps avec des solutions nouvelles. Je dis, l'Afrique de demain dépend de nous. La jeunesse sera ce que nous autres aujourd'hui allons leur laisser comme legacy. Alors il est donc temps de créer des entreprises, de créer des emplois. Sinon, ce serait la catastrophe que nous devons éviter. J'aimerais alors dire aux membres du panel que leur contribution est vraiment appréciée, sera la bienvenue, parce que de leur contribution, des exemples de cas que nous avons vus ici, que nous verrons ici, des jeunes Africains, des jeunes entrepreneurs qui investissent en Afrique, qui croient en l'Afrique, ce futur-là repose sur eux. Voilà ce que j'avais à dire ce matin. Merci bien.
Thank you, Al-Hassana, for that call to action and the energy. And that's what we love about the entrepreneurs, is that they bring energy to the stage. So with that, let me call up my panel so they can join me here. First, Haowa Bello. She is the CEO of Madame Coquette. Please, Haowa, join us. Now, Mr. Mustafa Sow, the founder and CEO of SF Capital. And then Mr. Derek Crandon, the CEO of Lionette Capital. Please help me welcome them to stage. Thank you, everyone. Thank you for joining us up here, and hopefully everyone in the audience will take part in this conversation as well. I wanted first to start with everyone because not only are you investing in the ecosystem, many of you, but you're entrepreneurs yourself. So I wanted to start kind of by asking Haowa to tell her kind of entrepreneurial story. What have you created? What have been the main challenges? And what's really helped you on your journey this far?
Thank you, Audrey. Morning, everyone. It's a pleasure to be here and speak in front of you all. I started Madame Coquette in 2008, just getting to 15 years. I started with a dream, really, and a hope to change the narrative about made in Nigeria products. I am from Nigeria, it's my native country. But we've suffered a very, very bad reputation regarding things coming out of that country. Standards were seen to be quite poor. So I wanted to change that. I wanted to challenge the narrative that we can produce something good enough to not only be used by Nigerians, but to be used by people around the world. So I started my handbag company. I started with a very humble capital. I didn't get any financing. Yeah, it's been a tough journey. It's been 14 years of trying to push back to prove to people that things can be done. The biggest challenge I think I faced, and I still face in my business, is getting skilled labor.
Really?
Yeah, we are a huge population in Nigeria, but a lot of the labor is not skilled, which makes it quite difficult.
And what kind of skills are you looking for?
So mainly artisans, people that can create things with their hands. These are skills that are easily transferable, but for some reason, it's really hard to get skilled labor because we don't have institutions that really support that. We don't focus so much on vocational skills. We prioritize education, going to, I guess, primary school, secondary school, universities. We don't really prioritize vocational skills. And I think with the population in Nigeria, what would work best for the country is to really prioritize that.
And have you had to train people internally because of that?
I did, yeah. I still train people. It's hard because getting people to work at that level takes years of training. So it does affect our output and production.
And also, you need to raise more capital, right? Because you're actually having to train individuals in your own business. So it's like solving a tragedy of the commons situation internally. Yeah. Well, speaking of the need for capital, Mustafa, I want to come to you. Tell us a little bit about SF Capital and your own journey in starting it.
Thanks, Aubrey. SF Capital is a Pan-African investment bank. Myself, I founded in 2017 after spending years in the investment banking and in the DFI world. And one of the reasons why we decided to do it is because at some point we realized in Africa that, number one, the reality in terms of mobilizing fund was an issue. But we also noticed, by being involved in some of Africa, is with Senegal, largest project, that African solution at some point has to come first from Africans. We've done the same school as is. I don't have nothing against the sort of international investment banks, but we've done the same school. We've done, we've started together in the same bank. So, and we are African. We understand our continent better. That's why, and I decided in 2007 to set it up. I know the challenge was going to be big because you're starting an investment bank by being 37. You're an African, and typically the type of transaction we wanted to underwrite ourselves were taken over by the big companies like Lazar, Rothschild, and stuff like that. And it was extremely challenging, but we stick to our plan and push. And the result is in 6 years, we've mobilized over 7 billion worth of project. And the reason why I was saying this to Hassan earlier is when we structure a transaction, we're not looking at the project. We just completed a $700 million project in Senegal as a recovery plan in which 700 million being injected in a road infrastructure project, 400 Senegalese companies being involved, and 50,000 employees being created. So this is the value added when we as African, we want to underwrite a project in our country. We take into considerations. We need to create jobs. We talked about it earlier. But how do you create jobs? We know that there are two pillars to do so. One is you have to create what they call a short-term or medium-term job. That's why in Africa, everybody thinks government has to create jobs. Yeah. But we're not doing it right, because when we put large infrastructure project, we need to structure it in a way where during that construction period, 5 years, you can solve a job creation in 5 years. But then what's next? Yeah. Is the training and the building capacity. And that's why we recently acquired a microfinance, because not only we are structuring and providing solution in the long term, but we are also investing in platforms that could help to create future entrepreneurs.
And I think you're playing a very critical role, and AIF does as well, because I've always said that some of the challenges in African markets is that there's too many middlemen in some sectors and not enough intermediaries in other sectors. So you being an investment bank, bringing the capital, structuring the deals, solving the bankable deals problem that everyone talks about is critical. And so how were you able to build the trust in the brand? Because I think sometimes people go with the global investment banks because they just want the brand more than anything else.
It's difficult. It has been very challenging. But once you build a brand, it flies. But I've gone through tough times. I remember there was a 250 million. That was in 2017, by the way, when I started, in which the mandate has been granted to a French investment bank. Yep. And they were struggling for 18 months to close the transaction. And I went to Friday to just pray right next to the CFO at I don't want to name the company for some reason. And then we just had a formal discussion. He was telling me about the challenge. They said, give me the mandate, I'll raise it for you. And I said, are you sure? And I said, yeah, no problems. I sent my mandate. He said to me, yeah, but can you send us a term sheet first before we sign the mandate? And then I've learned that not only that signed the mandate for that French investment bank, they paid them $500,000 retainer. Yep. Before they went and struggled. So for me, I had to do what no others would accept, which is taking the risk of taking my own term sheet, send it to them knowing that they can circumvent. Yeah. But these are the risks I had to take. We spent almost 18 months in that transaction closing, and you guess what? They took that transactions, they went back to that same French investment banks, and then underwrite the transaction with the same partner we had. These are the things that you live it, you have two options. Either you quit and you fight back, and that's what we did.
Yeah, I think one of the great advantages of this COVID period too is that talent is even more globalized, right? I mean, you both have had experiences outside. You understand the value of the diaspora in terms of not only talent to bring back, but a market. I'm sure you're selling your handbags, Haowa, in part to diaspora. And now, workers can work anywhere in the world, and therefore I'm seeing more competition for, say, programmers and others outside, where a U.S. company can hire Nigerian programmers, et cetera, beyond even Andela, like higher level things, even investment bankers that will decide to leave the big places, set up their own shops, and be part of kind of a network to build that. And so when you say you want to go into the microfinance space and be more involved, what's the direction there? Is it to give capital to individuals or to build out more of a digital platform eventually?
No, we have to go both. We have to go digital, but one of the trends today, whenever we talk about entrepreneurship in Africa, everybody think of fintech. But let's just be honest. It's good, but it's not going to absorb the job creation. We need to start creating champions, whether it's CNC construction business, industry, the informal sector. I mean, you cannot solve African problems without relying on what account for 60% of African economy, which is the informal sector. And that's what we are trying to address within SF Capital. With it Microcent, which is a branch of SF Capital. But most importantly, women empowerment. I know we are talking about youth empowerment here, but my personal belief is you will never achieve youth empowerment without women empowerment.
Correct.
Because they're the one, in Africa, we have a culture in which the women are the one educating, not the fathers, but it's the women. But if you help women, you help them send their kids to school, and you prepare the fundamentals, for promoting entrepreneurship or job creation, is through education.
Yeah, I mean, you can't solve the employment challenge without talking about jobs for women, because they're 50%, 2% sometimes of the population.
Exactly. That's why we believe, we strongly believe within SF Capital, within Microcent, to women empowerment. 70% of Microcent's employees are women.
Yeah.
The managing director is a woman, and the direction has been extremely clear. Let's empower women first, and then we'll get the job done with the youth.
So some of the challenges that I hear around financing, and how I will come back to you in a moment on this, but there's this early stage capital, equity investment at the beginning. I'm personally a seed investor through a fund in African startups. But then what I see, almost all the startups have working capital needs. And all too often they can't access credit from banks because they're either too young, or the banks are busy with bigger customers, or they don't see them as meaningful businesses. They don't understand their business models because they're tech-based. And so they often have to use equity as working capital, which is very expensive and shouldn't be used that way. So Derek, I want to bring you in on what Lionette Capital does and how you get entrepreneurs access to credit.
Aubrey, thank you very much for that. So Lionette Capital is a niche player in the equipment finance market. We have been successful in Sub-Saharan Africa for almost 10 years now. We focus on exactly that, where we find SMEs who are granted contracts by big infrastructural development projects. We find SMEs who are working in agriculture, needing to purchase equipment. Their normal difficulty is acquiring the capital from the formal banking sector, and we found a niche that sits between local banks and big international banks. Mainly the transactions are slightly too big for the smaller local banks and too small for the large international banks. And Lionette Capital found a scope to sit in the middle. What we also do, and that's probably one of the key aspects that set our business model apart, is we finance assets which retain value when they service and maintain. And what we know is when those assets are brought into an SME balance sheet, they are a good store of equity. And once they've been through the amortization period with us, they have these assets on their balance sheets which they can leverage and use for diversification and further expansion of their businesses. So we found that an exceptionally useful tool to support the SME growth. Through the SME growth, we know that these machines that we finance require operators, they require safety officials, they require maintenance officials, the companies then also require administrators, finances, etc. And we find that the scope of development that can occur around a successful acquisition of a piece of equipment really multiplies the job creation that one sees.
And so when you're assessing the SMEs on their credit risk, I assume because they have contracts with large entities to provide those services, that's a risk mitigator for you.
Yeah, very much so. For us, it's a forward-looking cash flow forecast decision, and with the understanding that the asset can retain value if you correctly look after it, service, and maintain it. It's an easier credit decision, and that allows us to inject capital into an SME.
And how do you expand that world so that you could reach even more SMEs that may not yet have those kind of contracts?
Well, therein lies the challenge, but where there is an interesting development right now within sub-Saharan Africa, and Africa is large, is that there is a clear push for infrastructural, large-scale developments across the continent, and we think that has a multiplier effect. So we think that if we position the SMEs, entrepreneurial SMEs, in that space correctly, enable them to have an in-principle capital injection coming from companies like ourselves, they will be able to acquire those contracts, and we see that as being catalytic as it will develop that sector in each country and allow a more self-sustaining infrastructural development fleet of equipment to be within the country.
I mean, it seems, Mustafa, that there's a lot of overlap there, right? You were talking about structuring infrastructure projects and having a microfinance entity that could lend to SMEs. So I'm sure this is of interest in terms of potential business lines for Francophone West Africa. So Haowa, I want to come back to you about how you raised financing over time. Did you start with kind of a friends and family round? Where are you in your growth, and will you have to raise additional capital? If so, how will you think about it?
Yes, so when I started, it was a $200 loan from my sister, which went a long way. I think I kind of grew organically. I don't know a lot about financing in other parts of Africa, but I know in my native Nigeria, it's quite difficult to access funding if you're a startup. So I did try going the bank route, but the interest rate scared me, and I ran away, and I never looked back. I cannot be paying double-digit interest rates with 6-month moratorium. It just didn't seem fair to me. So I just kind of let myself grow organically. I think things have gotten better. For startups, I think it is easier to access some kind of financing, but it's harder to grow. So I'm in that place where I'm not I still feel like a startup, even though I've been around for a long time.
How many employees do you have?
I have 4.
Okay.
Yeah, 4. So I do feel like a startup still because I am still struggling with those problems, but I'm not, the kind of financing I'm in need of right now, it's not what most startups would go to a bank asking in Nigeria. So it's hard to just kind of scale up. It's hard to grow. A lot of the banks, I feel, don't understand the needs of entrepreneurs or don't understand the businesses or our business models. They take all businesses as one. I'm not calling out banks here. I'm really not, just from my experience. I feel they don't really understand the value we're adding to the economy. So they lump us all in one big pile and feel one way would work for everyone, and that's just not going to work for me.
Yeah, I think the other challenge of businesses like yours is it doesn't fit the kind of classic tech structure, right? So there is a model. I mean, last year, $4 billion was brought in from venture capital. Actually, of that, almost 60% was tied to the US in some way. So this interest in venture and the startup ecosystem's been quite robust in the last couple years. In fact, when I wrote my book 7 years ago, the entire Africa tech ecosystem was worth $347 million, and last year it was $4 billion. So we see incredible growth, but that's still so small compared to the potential. But that investment is not reaching businesses like yours because it's not your business is not tech. It won't scale in the same way. You're actually manufacturing products. And I think it's difficult for businesses that fall outside of tech but are still startups to find that capital over time.
I think it is, and I go to bed every night with a huge headache, like, oh my gosh, how am I going to grow? And then I wake up in the morning with a renewed sense of duty. Okay, this is what I chose to do, and this is what I will be doing. It's nice that I have the support of AIF and AFDB with Dr. Addition at the helm, because I think they understand what I'm trying to do, unlike most people. And they give me a platform to kind of voice my ambition and my vision. So with my industry, I feel it's not taken seriously. In Nigeria, at least, the leather industry isn't seen as something that would change the economy, but it really can. It's maybe second to oil, to crude, but many people don't understand the impact that it can have on the economy. Nigerian leather is one of the best leathers in the world. If you do your research, you will get to know that. The tanneries that have been set up in my native country were set up in the late 50s or early 60s, and it's appalling that the tanneries still don't have the capacity to produce what global tanneries are producing. And this is due to lack of funding, and I don't think we've done a good job in the industry to really promote what we can do. The labor force that we can swallow is huge. I mean, billions of people could have jobs working in our industry. And my hope is to talk for as long as I can to whomever I can talk to understand, to make them understand that this is a real business and this is something that's very profitable.
Yeah, that experience, what you're describing, I think is true in many spaces where an entrepreneur starts out with their own core business, but then they realize that there are infrastructure gaps around them that then they have to fill, right? So I always say, like, what's the biggest trucking company of West Africa? It's Dangote, who owns 12,000 trucks because they had to solve a problem themselves of transport. And so many entrepreneurs, even the tech ones who start out in a very tech-defined businesses, find that they have to do the other things, particularly training, and they start having to do training schools, et cetera.
So if I could just come into your point, you're speaking my language. So when I started, I just wanted to make nice handbags, right, that were good enough, for people to carry, to channel Chanel or Hermes or Louis Vuitton. But when I started, I couldn't use Nigerian leather because it wasn't the standard I needed them to be. So I thought, well, why? Why are our leathers just not great? Like, what's the problem? So I had to go back and research, set up a goat farm just to research why we had this problem. So I had to set up a goat farm, which was a whole new business, right? Because I wanted to solve that problem. And then I wanted to start tanning my own leather. So like you said, there's a huge gap. So you find yourself having to do everything, and it's just not possible. You're torn in every single direction, and it's just not sustainable. So it's really hard to grow.
Yeah, I think one of the things that gives me some hope in that space is that at least in the tech ecosystem, you see that entrepreneurs are investing in each other's businesses because they see the synergies and they see the dependencies. They see that they need each other. So for example, some of the businesses I've invested in, their biggest clients are startups like Chipper Cash or like Flutterwave, and they're built on top of each other, so that can build. And maybe some entrepreneurs who hear your story are like, oh no, I want to be in the tannery business. I want to come alongside. So Mustafa, how are you seeing the evolution of these ecosystems and the kind of synergy between them, say like Francophone West Africa?
Quite frankly, in the Francophone Africa, it's a bit complex to create the synergy amongst us. To be honest with you, a lot of things we have achieved it with partners, but unfortunately not partners within the same regions. Not because we don't want to, not because we haven't tried, but it's very difficult. I think there is a lot of work that needs to be done in that area, especially in the Francophone market. The Anglophone market doesn't have that issue. When I have a client in Ghana or in Nigeria, they want to focus on their job and let me do my jobs. And therefore, the relationship I have with those clients since 2017 is still in place. When I'm doing something for a Francophone business, 1 or 2 years, when we establish, they'll start seeing that, okay, why him, not me? That usual. And you see unfortunately, it breaks something that is very difficult to fix, which is trust in business. That's why, and that trust is a reality. And I'm talking about mainly in the Francophone market. But what gives me hope is more and more you see there are entrepreneurs, like the like of, Hassan Kaba and, with a different mentality and mindset, who are willing, to open up and collaborate. Because there is a saying in my country that said, if one does one, two can do 10. That's why I'm urging African entrepreneurs, especially in the Francophone market, to create synergy. This is extremely important because, history has taught us that one of the biggest challenges that Africa is having is because of division.
Yeah, fragmentation.
Everyone wants to sit in their corner and do what they want to do. Now, the fact that there is a single language referring to Africa as one country is giving us hope. But it shouldn't be just be a talking, sitting in panels. We need to create those synergies.
But hopefully the success of a company like Wave, let's say, in Francophone West Africa and beyond, helps to build those connections itself.
Yeah, but we talk about Wave success, but who is within Wave? That's the big question.
And who's invested?
Exactly. As a group of investors, but who is leading it? It's not Africans.
Yeah.
It's Americans. So we need to have made in Africa Wave, where where Nigerians can leverage from Kenya expertise in that field, Senegal in that field. This is the reason why, if you look at all leading African companies that have done such at some point are disappearing or being taken over. Who owns this Kenya largest tech company that has almost disrupted the digital banking now? It has been taken over by Vodafone, I think, right?
Safaricom, you're talking about.
Safaricom. Wari, we all know the story about Wari in Senegal. They almost disappeared. But these are the things that...
But that's Al Hassana's point about who controls capital, right? And where that capital gets reinvested. And I think his call to action is absolutely true. And when I see entrepreneurs investing, and these are African entrepreneurs investing in each other, and I see their names on the cap table, that's super important.
Absolutely.
And then even women that I care strongly about, them being capital allocators. If we want to get them to reach more women businesses, have more women capital allocators. You change the faces of who makes the capital decisions, and you change the reality. Derek, I want to bring you in because you operate in East and Southern Africa. What are some of the trends you're seeing? South Africa in particular has unique challenges on job creation and entrepreneurship, and you guys have operated in a variety of sectors. What kind of trends are giving you kind of excitement right now that you're seeing in the markets?
It's actually interesting that you asked that question, and your last comment was about women empowerment. Mm-hmm. And rather interestingly, we're seeing a development in the operator space, so the machine operator spaces, where women are starting to take a larger and larger role in that. So that was the domain of men for many, many, many years. And many of our customers are adopting the principle that women are better operators, simply put, that they're gentler. So they're gentler with the equipment, they look after it more carefully, and that's a really, really interesting trend. The second trend that we see picking up from Mustafa's point is when you've got an entrepreneur, and that entrepreneur needs to work outwards in terms of services and support and provision, we see quite a proliferation of local law firms, local auditing firms, local tax firms, etc.
The services
being created. And it's almost as though that incubator in the center where the capital's gone in has created this mushrooming effect that pushes outwards into the community at a much bigger scale than one would look at when you just view the actual capital that you place.
The fastest growing sectors in East Africa the last couple of years have been in the services sector.
No question. And when you couple that with a statistic that Africa's infrastructural growth will outstrip anywhere else in the world. If you use that as a catalyst and you follow that value chain, the influence that's going to occur throughout the sectors that support them is significant. So if you can channel and harness that and you can push it back, you're going to be very, very instrumental in creating jobs.
Yeah, that job creation kind of nexus or hub is what everyone's after, but I think it's a question of job creation everywhere, right? And agriculture sector, kind of what you're talking about in the leather space, obviously services. One space I wanted to get Haowa your view on is the kind of creative space writ large. I mean, we've seen an explosion and a lot of the support by AfriExim and others of the creative industries. We heard about sports this morning. We're going to have a panel later this afternoon on creative industries. Fashion is part of that. Do you see more interest globally? Do you see opportunities coming to sell to global diaspora? How do you see that space growing?
Oh, I think it's a very exciting time for creatives right now. Nigeria has proven to be a leader in fashion and everywhere in the world. So I think it's interesting to see how things will kind of work out. Creatives have a chance to market their things not just where they are, but globally. So tech has played a huge, huge, huge role in that. And for me, I think just knowing that my things are seen by people, not just in my locale, but everywhere else, it's encouraging. It keeps me going.
So do you have to sell, do you have to find influencers to help you sell? Is this like a whole new, B2C model for you?
I think, yeah. The world has changed. We went to bed, woke up, and it's a different world. So I think with every brand, influencer marketing is the most important type of marketing right now. Nigerians are big on celebrity. They're big on influencers. So yeah, the best way to market your product, I think, would be to use influencers.
Yeah, I mean, it's interesting because all the time when I talk about job creation and where is it going to come from, so many times we're like, oh, Web3 and, African creators are just going to be able to create anywhere in the world, which is true. And excites me about the creative industries is it's a non-rival good, to throw in some econ language, right? So if you make a song and you're a musician, it can be played in Lagos, but it can be played in New York. And you can both listen to it at the same time. And unlike your bag has to be either bought and used one place or the other, right?
It's a physical product,
It's a physical product. So this idea of creating products that can be absorbed and used simultaneously everywhere is very exciting. I just wonder, again, where the financing will come for those creative entrepreneurs.
Well, that's why we're here. We're hoping maybe in the audience there's an angel investor or a venture capitalist is willing to finance. But yeah, it is interesting. So when people ask me what my biggest problem is in business or if I need money, so money, that's all it is. It's just money at the end of the day. Value, you can't put a price on value. And for me, I don't sell bags. I don't sell product. I sell value.
Yeah.
So the type of funding I'm looking for is a patient funding. It's a type of funding that really understands the value that I'm creating, not just for myself, but for Africa. And I think the more we have these conversations, the more we educate people on what it is that we're actually doing and try to get them to see the value, I think the money will follow. So maybe I'm not as aggressive with sourcing funding for my business because I feel if you create value, if you do a good job in creating the value, money will follow. Maybe that's not the best way.
No, it's a very, very noble view, and I think that's true. The question is, can we get enough entrepreneurs doing that so that we can get the jobs going very quickly? Mustafa?
No, absolutely. One of the main discussion about capital issue in Africa, and I've always said I think we have enough capital in Africa. I think the reality is most of the times entrepreneurs don't know where to go and find it. Other than investment bank, exactly.
Where do you think it's
Could you tell us?
Yeah, tell us all.
It's not. I think the utilization of investment banking service in Africa is extremely limited. And if you look at the Western countries, a company, no matter how small you are, if you're looking at fund, you're going to see investment bank. They're the one helping you raise the capital because that's their job. But in Africa, it's different. It's the entrepreneur themselves who wants to go and raise the capital themselves. And that's going to be tricky because one issue is your job is your business.
Yeah.
Let somebody else's job, which is go looking for money and go look for yourself. But the problem is we tend to do it ourselves. We don't value the service of investment banking. And that's something that we really need to work. You know, we had this discussion yesterday with Haowa exactly about, okay, do you need money? How do you go get those money, right? But most of the times they tend to go look for those money themselves. That's not their job. Their job is to focus on their business. Our job as investment bank is to help them get the capital, but the right capital.
Right.
So I think it comes to what you're saying about the synergy that we can create amongst ourselves. Each one focus on what you do. You create your own competitive advantage, and when you do, if we manage to do that, trust me, nobody can stop us.
Yeah, what I'm excited about too is that, you know, the people who work with you and for you as entrepreneurs on this continent may end up starting their own companies someday. So, you know, in the US context, we talk about the PayPal mafia, right? Everyone used to work at PayPal who left and started all of these different companies. And now as I see a lot of African startups, I see people who come from Jumia. And they bring the skills, because one skill is knowing how to work for a fast-growing company, knowing how it is to work with a company that went from 40 employees to 400 employees in a 3-month period. That in and of itself, managing that scale is not an easy skill to learn. And so those entrepreneurs, those early employees from all those different companies are now going over and around. And I hope the same thing happens in the investment advisory space and in the kind of the fashion space where you are, where designers may work with you, but then they go on and they start their own fashion houses.
Definitely. I just want to add on to what Mustafa was saying. We had a really interesting conversation yesterday when we met. So he's right. It's really difficult for entrepreneurs in Africa to source funding because my strength, my core skills are what I do, my handbags. That is what I do best. I'm not good at sourcing funding. I'm not good at putting together a proposal for the numbers to make sense. That's just not my core strength. So it's difficult when I have to do all those things and I have to wear all the different hats. And it's expensive to get good services. So we don't really get funding, not because we don't want to get funding or we don't know how to apply, but we don't have the right skills to apply for the right type of funding. If you're looking for a lot of money, you need someone that understands your business, that can translate what you're trying to say.
But I think the challenge there, and you know, again, I co-founded a PR business that works with African entrepreneurs because I realized that people can't invest in things they can't see. Yeah. And often entrepreneurs of color, wherever they are in the world, or women are invisible to global capital. But often entrepreneurs can't afford to hire my PR firm, and they can't afford to hire your investment bank. So, you know, one of the things I think could be unique partnerships coming out of AIF and others is where can, you know, DFI money or other more patient money subsidize those services? So instead of paying, you actually create the ecosystem of services, and then your investment bank grows, she gets your services, she pays something which she can afford because then you have value changing, but then maybe there's like a top-up or a subsidy that's being paid so that the services are sustainable. Otherwise, you have grants given that are not sustainable over time. So I think that's an interesting question. And Derek, I also think that the thinking about the next stage of working capital and debt funds for the African entrepreneurial ecosystem is critical. And like, what could be on the horizon, and where do you think, you know, more work needs to be done so that entrepreneurs don't have to go to banks and pay 18 to 23%, which are the average interest rates across African markets?
So one of the key trends that you see is that once that contract has been acquired by the entrepreneur, they're able to acquire the equipment and they start to work. But the certainty of payment is quite critical. So in many instances, there's quite a delay for those entrepreneurs to be paid. We've seen in recent cases 2 incidences where the entrepreneurs that we've funded have taken on government contracts in the one case, and then an international construction contract in the other case. And for an inextricable reason, the payment flows are exceptionally slow. In the former, this was a water services contract and a water certainty, so essentially building dams in rural communities. Those 2 entrepreneurs who we helped, they ended up waiting in excess of 180 days to be paid. And that just, when you're in a capital-intensive business, just drives your working capital up immediately. The other one was a similar sort of situation, but in a large-scale railway contract where they were subcontracting to an international player, and they weren't paid on time. And that trend is something that we've got to overcome in Africa, because when you've created this opportunity for an entrepreneur to grow and develop, he needs to be, or she needs to be paid. She needs to be paid on time.
That's true globally. I always joke that all governments pay slowly, everywhere.
Yeah, in essence, I think that if at a level that there could be an understanding that when there's a contract issued of that nature and there is a local content component, the cash associated with the repayment must be almost reserved and placed separately from the other.
At least a fund, right? To
or
fund
a fund of some sort.
The time gap.
And the trend, and if we could get that working, I think it's going to help accelerate entrepreneurial development across the continent.
If I want to add, you see, this is one of the reasons why I said also banks' creativity is extremely important. Because if you look at working capital financing, especially when it's come to this contract, we know that delay payment is definitely going to be an issue. That's why, creating product like factoring, like receivable financing,
supply chain
financing can help these entrepreneurs.
Enormously.
Absolutely.
Enormously. And these are other products that need to be in the market because, again, otherwise they're using equity, which is very expensive to the entrepreneur. Yeah. And the investor doesn't want their equity to be used like that.
Yeah, the one complication that you have with that is when you've got a public-private partnership type model, which you often see in this market, is it's exceptionally difficult to discount that invoice because that slow payment culture, etc., permeates through the system. So if we can find a way to ensure that those funds are actually earmarked, you could then have a discounting, you could have a factoring process. But the minute you're in that space, and they're relatively sizable invoices that are submitted, it is difficult to factor. And that dry up of working capital, as you very correctly point out, pushes the entrepreneur into his equity. And the very reason that he's a developmental entrepreneur is he has a scarcity of equity. Yeah. So you almost create a bigger problem every time.
So I want to end with one question to each of you. And I'll start with you first, Haowa. What if I made each of you in charge of creating 1 million jobs in your home country?
Well,
what would you do? Where would you put the money? And let's say you have a lot of money to do this. Or what would you invest in to try to create 1 million jobs in the shortest amount of time in, say, Nigeria?
I think I would start with the tanning business because you would need farmers. It starts from farming, so you need farmers to do that. You need people that will actually collect those skins. You need butchers. So you have farmers, you have butchers, you have the collectors, and then you have the tanning process, which involves a lot of hands. And then you have the retailers who will sell the leathers, and then you have the manufacturers who will access the leathers to produce. So yeah, I think you could create 1 million jobs with that ecosystem, within that ecosystem.
Mustafa? I'm from a smaller country, so you can have a less shorter target.
I'm a very pragmatic person. I know I cannot create 1 million jobs, but I know how to advise.
That's what I mean.
Private sectors and government to create 1 million jobs. What we did with the recovery plan is going to create 50,000 jobs in Senegal. It's a lot for a population of 17 million. The other thing is also that I've been personally involved in that is to promote agriculture.
That's,
one of the biggest mistakes we are doing now, and I'm seeing the same mistake being done and over, we talk about fintech a lot. We are not the US. Silicon Valley is not Africa. Indeed, let's not put fintech away, but let's focus on what accounts for 70% of our economy. We cannot ignore agriculture. Public sector, private sector should find a way to make agriculture sexy. So youth can believe that where we need to create jobs in Africa is going to be in agriculture.
Yes. Yeah, and even, I don't buy the make agriculture sexy thing because cities are always sexier, and we know that globally. However, what I buy is people in cities need to eat.
Yep.
So therefore, you still need investment in agriculture. You need commercial agriculture, which is not at scale, I mean, outside of Southern Africa, Southern and Eastern Africa, which have longer histories of commercial agriculture. Smaller hold farmer governs West Africa for the most part, in Central Africa. So for me, it's like all the campaigns to make farming sexy. I don't think you'll ever get the kids to go back and want to stay on the farms, but they will eat, and people will, if you have the farms more productive, then they can serve the cities.
If I could just add quickly, you don't need to make agriculture sexy. Make it profitable. Make people see that everybody wants to make money. Every young person wants to make a lot of money. So if you show that agriculture is a viable business that will make you good money, I think everyone will jump on board.
What about you, Derek?
I'm going to take Mustafa's lead. I don't think it's in my capacity to create 1 million jobs. But what I do think is also a very good point is if you can create a almost reverse urbanization trend around agriculture, around decentralized manufacturing, try and reverse that trend that's across Africa, where we see all the rural areas emptying out and people coming into the big cities. Try and create a reversal of that, where we push it out. You try and create regional hubs, regional manufacturing, regional farming, etc. Reverse the trend. I think you were saying it's sexy to be in the city. I think if we can reverse that, I think you're going to have a significant impact on job creation, because when you bring everybody to the center, there's just not enough jobs in the city, and you're creating your own problem. But if you push it outwards, if you decentralize that investment, if you take a view of your country from that perspective, look for those hubs in the regions, I think you've got half a chance of
Well, it is sure for the march of history that cities urbanization happens. Africa's passing the 50% mark. The question is secondary city investment. It's going to be cities. That's what we know that globally. And cities are more productive by nature. You run into people, you come up with collaborations. Globally, there's a higher production. But what we do know is that the future of Africa is young, it's urban, it's increasingly connected, and that presents so many opportunities for entrepreneurs. So with that, let me close this panel. Join me in thanking my esteemed panelists, and hopefully you can talk to them after the panel and find ways to do business together. So thank you.
Thank you, Audrey.